Hello there. Have you been wondering how to use your demand, or you are finding it difficult as a beginner to use demand and supply concept effectively on your chart? Don't worry, in this video I have you covered. I will go in detail and demystify all the concept of demand and supply. You understand? So if you look at this my board here, what is demand and supply in the nutshell? Supply means when there is excess buyers, or maybe excess seller in the market, you understand. When there is a supply of a commodity, the price of that commodity tends to move towards the downside, you understand. And when there's excessive demand of a product, that means there will be a scarcity, and that will drive the price of that product towards the upside. And that is it on the general concept of demand and supply. But when it comes to your chart, what does it actually looks like on your chart? On your chart, a simple demand looks like this place. It's essentially a place where there is indecision in the market, and after that indecision, you see the price move towards the upside aggressively, right? That is the typical demand there, you understand, on your chart. And then when you want to see a nice supply level on your chart, you want to see a place of indecision in the chart. You see indecision a little bit, and before that, after that indecision, you see a massive sell-off towards the downside, you understand. That is the whole major concept. That is how demand and supply is being represented on your chart, you understand. This is demand, you understand. This is demand, essentially the area where you see your indecision, or maybe a consolidation before a massive spike towards the upside. And when it comes to supply, it is where you see your indecision in the market. You understand? You see your indecision in the market, and boom, price will move towards the downside. Now, let me go further and show you what makes a supply zone and demand level a valid level. You understand? What makes a demand and supply zone a valid zone? What makes them a valid level? You understand? So let me show you really quick. You understand? What makes a demand and supply valid? I forgot to write the valid, but let me just put it, you understand. So you will discover that for your demand to be valid, you understand, for your demand to be valid, you have three things that I will mention shortly, you understand. You have to have these two things, rather, you understand. Number one, you want to see the presence of fair value gap, you understand. You want to see the presence of fair value gap, right? You want to see a presence of fair value gap. So you want to see a presence of fair value gap from the impulsive candle, you understand? And in this case, we are marking the last candle that gave rise to this impulsive candle. And you want to see your fair value gap. If there is no fair value gap, if price eventually price into this fair value gap, there will be no room for taking that level as our demand level, right? You understand? Because that will invalidate that level, you understand? For those guys, if you are a newbie, you should know what is the fair value gap. Fair value gap is essentially imbalance left behind because of excessive volume in the market. In this case, the volume is a buy volume, a buy pressure, and that left a fair value gap or imbalance behind. A fair value gap essentially happens between three sets of candle, you understand. You will see this candle forming in the three set of candle, you understand. You see this fair value gap happening between the three set of candle, and this is ideally the gap between the first candle, this candle right here, and the third candle, you understand. The third candle right here, you understand. So this is essentially how a fair value gap should look like, and that is what makes your zone a valid level, you understand. It is a valid level because there's a fair value gap. So price will tap price into this fair value gap, filling it, and tap into this last candle. Remember, it is the last candle that formed before the massive impulsive candle and the fair value gap happening, you understand. So when this thing happens, what can you see from here next? You will see that price will definitely naturally push towards the upside from this level the moment it reprice and take out this fair value gap, which in some cases some people refer to it as the internal liquidity. So the internal liquidity being taken out before price tap into this demand zone makes it a valid level, and price will likely push from this level towards the upside. You understand? That makes it a valid demand level. And you remember, this concept is still the same, is the same as for the supply level. Is just the other way around, just entirely opposite, but they have the same concept. So in a supply level, you are equally going to see your fair value gap present in that level as well. You understand? So that is how to do this thing. If you flip it the other way around, it is going to be your demand level, and that is exactly what you want to see in your supply level as well. In your supply level. So then again, one of the things that you want to keep into consideration before you even draw your demand and supply level, if you want to make it a valid level, is to make sure that there's a presence of an established trend. You understand? If there is no established trend or established direction for the price, you are just wasting your time. You have to first of all establish the trend of the market. Is the market trending sideways? Is it moving towards the downside, or is it moving towards the upside? Those are the questions that need to be answered before you jump into the market and mark your level. If you cannot answer this question, you have no room, or you have no business with demand and supply at that case. You understand? So you want to make sure you have your level drawn. You understand? So make sure you have your level drawn to make sure you have to establish a trend. You understand? Establish a trend. When I mean establish a trend, find the direction, look for the break of structure. In this case, we have the market moving towards the upside. At any particular time, you see that the market is moving towards the upside, right? So that makes it a bullish order flow. And when we are in a bullish order flow, what are we going to be looking for? We are going to be looking for our demand level, of course, you understand? And in this case, this place will now represent our demand level. You understand? So this thing I'm telling you is very, very important. You don't want to jump into your chart and start marking any random level as your demand and supply level. Before you do anything, make sure you have your chart marked out, establish the trend. Where is the trend moving towards the in the market? Is it moving towards the upside, or is it moving towards the downside? Or are we in a sideways market, or in the ranging market? Those are the questions you need to answer, because if you fail to answer this question, or if you fail to establish this concept, this directional bias, you will be marking the wrong supply and demand level, and that will result to a losses in the market, and that is what you don't want to do with your hard-earned money, right? So make sure because in this case, if you are to take this level as our supply level, you understand, not putting into consideration the overall trend, you discover that you'll be stopped out just a few minutes after the price go towards your direction momentarily. You have this momentary winning, and you'll be thinking that, oh, you are a god over the market, not knowing that you are just fooling yourself. You understand? I'm sorry to use that language. So you have to make sure you are in agreement with the trend. You understand? So if you don't want to be used as liquidity, make sure you always establish a trend. You understand? Establish a trend, establish the directional bias of the market. Once you know this level, you come out clean. Because if you fail to do so, just as you are seeing on my board here, if you are taking this as your supply level without considering the overall trend, you understand, you discover that you are going to be stopped at the moment the price, although you have a momentary win, you understand, and boom, the market will just turn back against you, right? And it will take you out. You understand? So that is why you want to make sure you are in agreement with the overall trend before you mark your supply. But if you want to take this level now, if you want to take this level you want to take this level like as your demand level, you discover that the price will not come back to you because it moves up aggressively, right? And even when it comes back a little bit, it's just a pullback, and boom, the price will continue towards the initial established direction, because of course we have a break of structure right here. So those are the things that you need to put into consideration. If you don't want to take my word for it, let me go to my chart and show you that this thing does exist in the market. Let me go to my chart and show you a clear example on gold market right here. You can see that we have been pushing towards the downside for the gold market, right? Look at it. Look at the overall trend. Look at it. From this place, you see that every interval we are breaking structure, creating lower lows and lower high. You understand? Look at it. Lower low. Look at from this place, the market is pushing towards the downside, creating lower low. You understand? Lower high, lower low, lower high. You understand? Lower low, lower high. You understand? So this thing makes this trend and a bullish trend, or a bearish order flow, rather a bearish trend. You understand? And you can see that we are having a successive break of structure, is a break of structure at any given moment. Look at this place. At any given moment, we are having a break of structure. Let me look at this break of structure here. You understand? Break of structure from this level, from this level upward here. You see break of structure as well. Look at this place. Look at this place. Break of structure, right? So this makes it in an established trend towards the downside, and you don't want to mess up yourself marking a demand level at this point in time. You understand? So if we are to mark any level now and take it as a supply level, you will discover that this will be our perfect place. Look at this place right here, because if you look at this, is the last candle that forms before the fair value gap. You understand? If you take that place as our supply level, you will discover that price will tap into it. You understand? You understand? And in some cases, we can use a breaker block as well, or we can use inverse fair value gap. You understand? So in this case, you should take this as a supply level. You will discover that price will not tap it into it effectively. You understand? But what if we use this inverse fair value gap, the price left behind here, you discover that price will effectively tap into this level. You understand? Look at the price tap into it and start moving towards the downside. You understand? So you can equally go, and I'll go on and show you another example. Look at another example for the supply level again. Look at this place. We are taking the last candle that formed, and remember, this candle gives us a fair value gap. It must have a fair value gap. You understand? Look at it. Fair value gap right here. So look at it. We have a fair value gap here. So this is the fair value gap. You understand? This is the fair value gap, and this is the fair value gap between this first candle and the third candle, and boom, price reprice into it, and what you see, a massive sell-off start happening towards the downside. You understand? So I can go on and show you. Let me show you even on Euro USD chart. Let me show you Euro USD. You understand? At this point, you can clearly see that we are pushing towards the downside. Euro USD is pushing towards the downside, and you can see that we have this level right here, because this level obviously is our demand level. Why are we taking it our demand level? We are taking it as our demand level because, of course, there's a presence of fair value gap right here. You understand? This fair value gap here, and this last candle will be marked as our demand level. What can you see? The moment price tap into this demand level again, price start pushing towards the downside aggressively. You understand? So this makes it a valid demand level, valid supply level rather. You understand? Because of course the market is moving towards the downside. Remember, I told you, if you want to mark your demand or supply level, first of all, you need to establish the trend. And in this case, the trend is the order flow, or the trend is moving towards the downside. So there's, if you're a logical person, you should have no room, or you should have you should have no business by drawing your demand level at this point. Everything should hit towards your supply level. You understand? You have to draw your supply level at this moment in time. Okay, let me go down and show you when the trend is now changing from okay, let me go to another place and show you another beautiful example. Look at this place. Look at this place. Before now, what can you see? You have been seeing that the market is in a downtrend. You understand? All the other flow is moving towards the downside. And coming to this level, you can clearly see this level. Look at this, all these places as they are moving towards the downside. This place now become your supply level, because why? It is the last candle that formed before the before the bearish impulse happening. And this impulse is not just an impulse. Remember, I told you it must have a fair value gap. You understand? And this is the fair value gap right here. This is the fair value gap. So the price rise into the fair value gap and push towards the downside. You understand? So it must have this fair value gap to make it a valid supply level. If it doesn't have a fair value gap or fair value gap, that place should not be considered as a valid supply level, because you are going to it is going to be used as a trap or liquidity for you. It is going to use you as a liquidity, and that is what you don't want to be doing with your hard-earned money. You don't want to come into the market with your hard-earned money and be used as the liquidity of. So no one would want such to happen. So that is why you want to make sure you establish a good trend before you jump into the market. Now look at another example of a beautiful supply level right here. You know, this market has been in a downtrend for long. And on getting to this place after this liquidity sweep, I will teach you guys in my next video how to understand structure very well and liquidity sweep. So after this liquidity sweep, you discover that the market start pushing towards the downside after the market structure right here. You understand? Look at the market structure here. You discover that we have the market before now. The market have been forming high, lower, low. You understand? Lower, low, right? Lower, low, lower highs, lower, low, lower highs. You understand? Lower, low, lower highs. You understand? Lower, low, lower highs. And all of a sudden, at this particular place, the market failed to give us another lower low. You understand? Instead, it start pushing aggressively towards the downside, forming a higher highs. You understand? At this point, it has created a higher high, and we are going to consider this space as a structure shift. You understand? So, and remember, while it was going towards the upside, it left an imbalance. An imbalance in this case is refers to as fair value gap. It left a series of fair value gap behind, and in this case, what can you see? The last candle that gave rise to this fair value gap is this particular place. You understand? So it will be logical for us to mark that level as our next demand zone. And when price tap into this, what can you see? The moment the price reprice into this level, feeling all this imbalance, what can you see? You can see that it start pushing towards the upside aggressively again. You understand? So this makes it a valid a valid demand level. You understand? So remember, let me reiterate again. Number one, for your supply or demand level to be valid, it must have fair value gap, right? And number two, it must have what we call an established trend. You understand? The trend must be in agreement with the overall trend. You don't just want to go on your chart without establishing a directional bias for the price and start drawing your demand or supply level. It is going to be foolish of you. You understand? It's going to be stupid. Sorry for that, for using that language. You understand? So you don't want to do such stupid thing on the chart. You don't want to fuck yourself up. Sorry for using that language. You understand? So you want to make sure you are in the agreement with the price before you do anything in the market. You understand? So this with this, I think you have a better grasp or a better knowledge of the market. You understand? Or how to do your demand, how to draw your demand or your demand level and your supply level. In my next video, I'm going to come up with a robust, a well detailed video about forming price structure, how to understand structure, your liquidity, your supply level, how to draw your break of structure, understand everything. I'm going to make this thing very clearer for you. I'm going to understand it even further. How to use liquidity sweep in conjunction with your supply level and makes it a confluence. By that time, you are not going to be using only demand level again or supply level again. You are going to be using demand in conjunction with liquidity sweep, and this will even make it more meaningful to you and it will make sense to you as a trader. So I'll see you in my next video, and you want to make sure you subscribe to this channel and join our community for more knowledge like this. Thank you.